Right, let's change the pace. Business News, Stephen Carroll joins me in the studio. Morning to you, Stephen. A very big day for trade in the EU.
The hard-fought trade deal between the EU and Canada, called a Comprehensive Economic and Trade Agreement, or CETA, is being voted on by members of the European Parliament today. It took 7 years to negotiate and is the biggest trade deal ever negotiated by the European Union. MEPs are expected to pass it, but it's faced strong opposition in some quarters. Diptyque Laurent has the details.
It's taken 7 years of negotiations and faced vehement opposition. The Comprehensive Economic and Trade Agreement, or CETA, promises to bring Canada closer to Europe. CETA aims to boost growth and jobs in Europe by eliminating 99% of import tariffs with Canada, saving the bloc €500 million annually in duties. A key sticking point of the treaty, mutual access to public contracts. European companies can compete for government contracts in Canada, and Canadian companies will also be able to respond to calls for tender in Europe. The deal also includes protection for particular products that are produced in 142 geographic zones around Europe. This includes, for instance, Roquefort cheese and champagne. The EU promises that only products that conform to European food and environmental standards will be given free access to the EU. This won't apply to Canadian beef and pork. This in response to arguments that the CETA deal could allow hormone-injected meat to enter the European markets. One of the most controversial parts of the deal is a proposal to set up special arbitration courts. These courts would settle disputes between investors and national authorities. Critics argue that it would allow powerful multinationals to effectively sue countries if they don't like their policies. To appease their concerns, the deal will include setting up a permanent court where all hearings will be public, but it's not enough for opponents of CETA. A petition calling for the deal to be scrapped has been signed by over 3 million people.
Well, here in France, the bank Natixis is being investigated over statements it made way back in 2007, Stephen.
This is about two statements from the bank in the second half of that year as the subprime mortgage crisis was unfolding in the United States. The lender is being investigated since 2010 over allegations of spreading false information and inaccurate financial data. It's now been placed under formal investigation by magistrates leading this inquiry. Natixis says the information it provided provided in good faith about its exposure to the crisis. The bank was one of the worst hit French lenders by the subprime issue and had to be rescued from near collapse by its parent company.
All right, Stephen, talk us through how things are looking on the market.
European shares generally starting the day up. Small gains in London, Paris and Frankfurt at the start of trading. Interestingly, Natixis shares in Paris not moving very much on news of that formal investigation. Investors must not be very concerned about that. Over in Asia, we had some optimism from Wall Street spilling into Asian trade today after the US Federal Reserve Chief Janet Yellen hinted again that interest rate rises were on the way. The Nikkei in Tokyo finishing the day up over 1%. The Japanese telecoms firm SoftBank, their shares were up 1.5% after the news there to buy the American Fortress Investment Group for $3.3 billion. Less good news for Toshiba, their shares down nearly 9% as the fallout from problems with their nuclear business continues. A look at some of the day's business headlines for you next. French bank Crédit Agricole saw its profits slump by 2/3 in the last 3 months of 2016. It says earnings were hit by customers refinancing their mortgages to avail of lower interest rates. Revenues of the bank were up by 7%, though, to almost €4.6 billion. Investors pleased with the results. Shares are up 3.5% at the open. Facebook is creating a standalone app for televisions that will allow users to watch videos from the social network on their TV screens. It's a move by the company potentially into an area dominated by streaming services like Netflix. The company is also making changes to the way videos will play on mobile phones, including the sound playing by default. And a court in the United States has given preliminary approval to a settlement with Volkswagen drivers affected by the emissions cheating scandal. The company has offered a deal worth at least $1.2 billion to owners of around 80,000 cars that were fitted with cheating software. It includes compensation on top of money for buybacks or repairs.
And finally from you, a much-loved mobile phone that could be set for something of a comeback, let's say.
Did you have a Nokia 3310 at some
I think
stage?
I did many moons ago.
Didn't we all? Well, it could be on its way back. It was launched first back in 2000, one of those really iconic mobile phones. But according to reports, a rebooted version is set to be unveiled at the Mobile World Congress later this month. The rights to Nokia brand phones were bought by a Finnish company called HMD Global Oy after, of course, they'd been owned by Microsoft. The company has scheduled an event in Barcelona that, according to reports, will include the new 3310 at a price of just €59. But the important question is do we know if it has Snake or not, which is what most people remember about that phone.
I had to look at the picture to remember I did have one of those. But life was so much simpler. Do you remember the
It
smileys?
was terrifying how much things have changed.
They really have. Stephen, thank you very much for that business roundup.